Welcome to Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. We're watching the market fallout from the Trump administration's attack on Venezuela and the capture of Nicolás Maduro. That surprise sparking big moves in energy stocks. Chevron, the only U.S. company still producing in Venezuela, it's up about 7%, and other companies are also jumping this morning. ConocoPhillips, SLB, Halliburton among them. Oil prices themselves so far are little change as analysts try to figure out who will be in charge in Venezuela and what eventual impact that could have on oil supplies. The equity market reaction, meanwhile, to that attack is muted. Investors are betting the geopolitical conflict will not get bigger. And speaking of big, it's a big week for big tech. Nvidia's Jensen Huang and AMD's Lisa Su both will be taking the stage at CES. That, of course, is the big annual tech expo that's formerly known as the Consumer Electronics Show. Their announcements could set the tone for the AI trade for 2026. Let's get a check-in on stock futures here this morning. First full trading week here of 2026, and right now it's off to a positive start right now. The NASDAQ futures right now pointing to a gain of 0.8%. S&P futures indicating an advance of about 1/3 of 1%. Dow futures, little change to the upside. But really, we are focused on two areas today, tech and oil. So let's talk about oil and Venezuela and dig into our top story of the day. Over the weekend, Venezuelan President Nicolás Maduro and his wife were captured by U.S. forces in a surprise military operation. Now, many questions remain over the future of the oil-rich nation. President Trump has said the U.S. is now in charge of Venezuela. And this morning, Maduro appeared in federal court in Lower Manhattan to face U.S. drug trafficking charges. For more on the market reaction, the stocks to watch, and what happens next, we're joined by Yahoo Finance's Ben Worschel, Inez Ferre, and Jake Conley. Ben, let's start with you and the view from D.C. here, because yes, President Trump has said we're in charge, but we've gotten some mixed messaging, and I assume there's going to be a lot of confusion in the coming days.
For sure. Mixed messaging is a nice way to put sort of the back and forth here over this weekend about exactly kind of what policy changes are in the offing in Venezuela as a result of this. As you mentioned at the top, Trump has said that the U.S. is now running the country, but it is worth noting that the acting president of the country right now is a woman named Delcy Rodriguez, who was the vice president last Friday to Nicolás Maduro and is a longtime ally and a longtime socialist as well. So she offered a statement last night that offered sort of conciliatory language towards the U.S., talked about a cooperation agenda around shared development between the U.S. and Venezuela, but exactly what that means isn't clear, and how her new administration begins to work with Trump and his team very much up in the air, especially on this oil front. I think this sort of shared development is clearly a kind of a code for oil, but exactly what that means for the U.S., for all the other countries involved in Venezuelan oil, it remains to be seen. You mentioned the kind of muted effects of this so far on oil markets and equities. I think the way this changes is on this oil front, especially with China. That's the sort of area I've been focused on this morning. Venezuela has been described as China's biggest ally in Latin America, a big consumer of Venezuelan oil. Chinese companies are involved in developing oil fields in Venezuela right now. There was a big one last year that talked about a 20-year deal between the U.S. and a Chinese firm. So that, I think, is the major front. So far, the Chinese have just offered condemnation of what Trump did over the weekend, but haven't threatened specific responses. But even Trump acknowledged last night China has a lot of levers to pull. So I think that's a big strand to watch in the days ahead.
And Ben, there's also a lot of course, international reaction here to what has happened, and a lot of speculation about whether this will enable or conversely put curbs on other leaders internationally making these kinds of moves.
Yeah, absolutely. I think one of the other major changes that could be happening is sort of whether Trump feels empowered by this, and we'll see a lot of that in the days ahead to do more of this. Just in the last couple of days, he's talked in similar terms about Colombia, the nation of Colombia. He's talked about Greenland, and he's talked about Cuba, all three areas that he might look to do something similar in the days ahead or days or weeks ahead, depending on kind of the outcome here in Venezuela. I think the initial reaction of Venezuela clearly shows us that maybe the economic effects could be muted. Those are a lot more complicated situations that could be a lot more complex, depending whether the markets tends to start to believe Trump may actually follow through on a lot of these new threats he's making.
Yeah, it's obviously very difficult to tell at this point in time. Let's turn to oil prices themselves. And Jake, for that, I'm going to go to you. And you and I were talking before the show earlier just how divergent some of the forecasts are in terms of what oil is now going to do, because this is a really difficult to predict situation.
Yeah, you see some mixed movement in the markets, right? Oil futures up about 1% roughly on both Brent crude and West Texas Intermediate. Oil companies themselves, though, moving much stronger, up 3%, 4%. Oilfield services like Halliburton, SLB, also doing really well. If you think about what's this going to look like on the ground in Venezuela, if President Trump's idea of kind of an oil industry restart in Venezuela come to fruition, the first thing that's going to be there are these oil services companies doing workovers, looking at infrastructure. You got to remember, a lot of this infrastructure has really degraded since the Chavez days in Venezuela. There's been a bit of a brain drain of the workforce that has gone to the Middle East or gone to Houston. And so you don't have the people there and you really don't have the infrastructure. So a lot of these oil field services companies and then some of the oil majors, Chevron, of course, being the only one still operating there, but also Exxon, maybe ConocoPhillips, would be coming in next to try to see, okay, what is the actual benefit to us here? The kink here is going to be the kind of oil Venezuela sits on. Unlike US shale oil, which is a very light, sweet oil that's really good for converting into gasoline, Venezuelan oil is really heavy, really sour, what we call it, or more sulfurous. And it's primarily used right now for bitumen, for asphalt paving, for roofing, for heavy industrial applications.
And is all of that lower margin for these companies? In other words, we've seen some capital discipline from some of these big oil companies recently, right? They're not necessarily willing to spend as much. So that seems to me to be the lingering question here. How much are they willing to spend to rebuild in Venezuela? And what do they see as the return on that investment?
Yeah, you're exactly right. The industry right now is really at a point of de-risking. You see this across the board. All of the big majors have pulled back from exploration. They've pulled back from discovery spending. They're doing more workovers, more tiebacks to existing prospects. So the idea of not only going into a new prospect, especially for the others who aren't there, Exxon, Conoco, going into a new country, going into a really politically unstable environment is going to be a big question, because is it worth the risk, especially because of the extra money you've got to spend to refine this kind of oil. Most of that's going to take place in Louisiana, along the Gulf Coast. The industry and infrastructure is there, but still, the margins are worse because that refining takes more money. And so is Chevron, is Exxon, is ConocoPhillips going to look at this and say, this is a good business investment? Or are they going to say, I don't know, we want to wait? I was talking to some analysts over the weekend who said the soonest we're going to see real output increase in Venezuela is probably at least 3 to 5 years. Tensions need to settle, infrastructure needs to come back, and then maybe we'll see some uptick.
Well, there's also the wild card of whether the president and the administration are going to be leaning on these companies, no matter what the business, the actual business rationale is. So we'll have to see what that's going to look like. And Inez, it's not just oil, by the way. We are looking, and the sort of equity market reaction aside, there are other assets that I know that you're watching closely as well related to all of this.
Right. I've been watching the metals market and watching gold, watching silver. This gold, of course, seen as a safe haven during these geopolitical tensions, but also just keeping in mind that beyond oil, there are also other resources in Venezuela that strategists point to. You have gold. Venezuela has one of the largest gold and copper deposits in the world, La Brisas. You also have other resources. They have coltan, which is a type of metal that's used in smartphones and in laptops. So you have to keep in mind that strategists have been talking about a resource war or a metals war that has been happening. Keep in mind that China has curbed their exports of silver starting in the new year. And there is sort of this idea that the U.S. is looking for resources in the Western Hemisphere. And now with Venezuela, this puts a foothold on those resources. And also with Argentina and the support that the U.S. has given Argentina in recent months to support its currency, that is seen as a way of also gaining access to Argentine resources, which go beyond oil, because Argentina has lithium, they have copper as well. So this is all part of this sort of strategy to go after these resources and to keep China away from these resources.
Yeah, and indeed, the Argentinian president, Javier Milei, was one of the leaders who thought it was a good thing that the U.S. had come in and extradited Maduro from Venezuela. So quite interesting there. And Ines, when it comes to the sort of strategic importance of Venezuela with China and its relationship in terms of buying oil there, talk to us about that sort of relationship and how this now potentially changes all of that.
Yeah, I mean, keep in mind that China and Venezuela have had a relationship for decades now, and China has made major investments in Venezuela as well. And China was buying oil from Venezuela in Chinese yuan. I mean, a couple of years ago, Nicolás Maduro came out and said that they would be accepting yuan. Of course, you have PDVSA, which is their state-owned energy company, which because of sanctions also couldn't accept US dollars. But this idea that China has been wanting to do more transactions in yuan, and this is getting away from the petrodollar because typically you have oil that is invoiced in US dollars. But this will accelerate the sort of need for central banks, or the desire for central banks, to keep accumulating gold because they are trying to get away from under the thumb of the US dollar. And these transactions that China was making with for oil in yuan, and also making investments and other barter agreements as well, that it was seen as something which the US didn't necessarily favor. So of course this changes now the dynamics between when it comes to China and purchasing oil, and the fact that they were purchasing in yuan.
Yeah, guys, I think my takeaway from all of this is that this is a very complicated situation with a lot of ripple effects and a lot of questions still about, what are the various effects of this? How is this all going to turn out? Not least of which is it eventually going to mean lower oil prices, and how eventually? But we're going to be talking about all of that throughout the next couple of hours. So thank you so much. Appreciate it, Ben, Ines, Jake. Coming up on Morning Brief next, we're going to bring you today's top trending tickers and count down to the opening bell. We'll be right back. Time for some of today's trending tickers. We are watching Taiwan Semiconductor, Mobileye, and Comcast. First up, Taiwan Semi. That stock is rising on the heels of an upbeat analyst note from Goldman Sachs, which raised its price target on the stock by 35%. The chipmaker riding the wave of the AI boom and optimism that demand will continue to surge in 2026. Goldman analysts say in the note that AI will be a, quote, multi-year growth engine for TSMC. Next is Mobileye. That stock is jumping ahead of the opening bell on Wall Street after the company said it secured a deal with a major U.S. automaker for its chips, but it didn't say which one. As a result, Mobileye lifted its production outlook, and the automaker will include the company's self-driving technology in millions of vehicles. It comes after a tough year for the company. Shares were nearly cut in half in 2025. And finally, Comcast. The telecom erased earlier losses as the company starts a new era without its portfolio of cable TV channels. The company's completed its spin-off of those businesses into Versant, which starts trading today on the NASDAQ under the symbol VSNT. Shares of Versant also pointing to declines at the open, but on low volume. Comcast shareholders got 1 share of Versant for every 25 shares of Comcast they held as of December 16th. Well, Nvidia CEO Jensen Huang and AMD CEO Lisa Su will be delivering keynote addresses at CES as the annual tech conference kicks off. For more on what to watch for and how to invest around it, we're joined by Sylvia Jablonski, Defiance ETF's CEO and CIO. Hey, Sylvia, good to see you.
Good morning, Julie. Happy New Year.
Happy New Year to you. Now, I know that you have been focused on the tech trade, but you've been looking more broadly than that. But I wonder, since this is like the first thing happening besides Venezuela in 2026, is there anything you're going to be keying in on from CES to sort of set the tone on the AI trade for this year?
Yeah, I think, you started out the segment talking about your top three stocks to watch, and one of them was Taiwan Semiconductor, right? And so I think it's been a very long time since one of the top three stocks to watch hasn't been related in some way to AI power, AI energy, things like this. And so, I'm just going to be listening to hear what they say and what the outlook is for the AI space, how it's progressing, how we're going from massive infrastructure, build out and spend into translations into different sectors and improving margins and productivities, outside of just tech and AI. So it'll just be interesting to hear if the messaging for demand remains the same and kind of the outlook for the growth. But I anticipate that it will. These are usually, hurrah moments for AI and Lisa Wang, Jensen Huang and Lisa Yu. Woo.
Yes, we'll definitely be talking about all of that. I mean, and it's interesting to your point that the focus, and you're certainly not alone in talking about this, that the focus has been shifting more and more from these exclusively tech companies to how the tech is going to play throughout everything, or where it's going to be playing out. So how, as an investor, do people assess that going forward into this year?
Well, I think, investors piled into the top AI names, right, which are arguably Nvidia and AMD. They still may be part of that equation, but I think what's really changed is where the puck is going and what we're hearing about now, right? So what we're hearing now is that the energy demands for AI and the continued build out of AI are just absolutely soaring. The connectivity needs are going to soar as AI actually comes to fruition and AI is actually applied across different corporations and across sectors and things like this. And so you really need two things, three things really: power, infrastructure, and connectivity. And so I would be looking at those 6G names. I would be looking at those AI power and infrastructure names. We're talking about multiples of expansion that have to happen, between now and 2030 for all of this to continue running, even where it's at, right? So I do think that investors have a lot of opportunities. There are a lot of ETFs that capture this space, whether it's, AI power infrastructure ETFs, whether it's 6G ETFs. It's the picks and shovels of the space that are really going to be capturing the investor's eyes this year.
Sylvia, what risks, if any, are you worried about when it comes to how this is going to play out, not just from a fundamental perspective, but also from a stock performance perspective? What kind of risks are you going to be watching out for?
Yeah, I think, there's always kind of these outliers, right? We came into the new year with another geopolitical issue. We don't know, kind of when that comes into play, right? So geopolitics and tariffs, relationship with China and trade and things like this, if there's kind of bans and prohibitions and additional excises that are unforeseen for some of these AI players, that certainly impacts them. And we've seen what happens to the market when those things happen. So kind of the unknown. And the other thing is just investor patience, right? Like you see what happens. A lot of these AI names are running up and investors have become squeamish through different parts of the year that perhaps, valuations are too high and that this is a bubble. But, what I would say is that investors should just keep their eyes on these companies, right? They're still cash heavy. Their balance sheets are strong. They have, very much quality underpinning their investments. And I do think that we are still in the infancy of like the AI quantum, AI infrastructure cycle, and a lot of opportunities will exist.
And then, we started off the discussion talking about Taiwan Semi, right? And that, there are still certainly optimists when it comes to the chip makers and the further that they can see further upside. Are you in that camp also? Do you think that even as people are looking at the sort of ways that AI is being implemented, they should also be looking at those picks and shovels that you talked about, that we've talked a lot about?
I certainly think that there's a lot of reason for optimism, whether it's, in the AI infrastructure and power names, or whether it's in the classic names that a lot of people remain invested in, like Nvidia, for example. They gave us their revenue outlook and they're talking about 65% growth, right? And so when you're actually hearing it from the horse's mouth, you have some level of confidence that these companies see a demand picture that is very bright and positive, so that can continue to soar. But, if you're an investor that is heavily invested in the space already and wants to kind of diversify out, you can look at the XMAG, right? You can look at the other 493 stocks that are not, just the Mag 7 and that will participate. And some of those names were the biggest biggest performers last year, right? If you look at like a Seagate and a SanDisk and Micron, I mean, some of these names did incredibly well, and they too are part of the AI story, either directly or correlated to the AI story in some way. So XMAG is also a great way to go.
Speaking of correlated or maybe sort of a tertiary play on AI, I know you're watching crypto also going into this year. So how should people be thinking about that after kind of a strange year for crypto, I guess we could say, after, a big sort of policy push, but then not seeing the performance?
Yeah, it's been an interesting year for crypto, right? And you saw, you kind of saw a lot of consolidation. You saw a lot of selling off during the different times when the market would pull back. Investors also, pulled back and kind of sold off in crypto and things like this. I think that this will be a pretty pivotal year for crypto, and will perhaps set the short term and near next couple of year term expectations for where crypto is going. I still think you have a lot of potential there, right? You do have this positive pro crypto government and policy that will come into play, and when you have rules and playbooks that make things a little bit more clear for institutions, perhaps that opens up institutional trading and things like 401k or different types of accounts that didn't permit it before. You have all of these ETFs that are continuously growing and expanding their allocations to crypto, so that institutional investment could also help the asset grow this year. And again, I think it's something where, if we have stability in the market, if we get those 15% S&P 500 earnings growth numbers, and it is kind of a stable and steady market, I think perhaps investors will start dipping in at these levels, just kind of remembering that we were back at 120 not so long ago. So, I can't predict the future here, but it is an asset that has fallen, and it is an asset that has great potential to grow. So it's something that investors could look at this year.
All right. We'll be watching it, of course, along with everything else. Sylvia, good to see you. Thank you.
Great to see you. Thanks, Julie.
Coming up next on Yahoo Finance is Opening Bid, hosted by our executive editor, Brian Sozzi. He's here right now. Soz, Happy New Year. We haven't gotten to say this to each other on camera yet.
Julie, Happy New Year. And in case you're wondering, I'm going to spend the next 30 minutes talking about Chevron in Venezuela. No, I'm absolutely not going to do that. But Chevron's going to get a shout out. We're going to talk more about Venezuela. But there are other things going on in this market. CES underway. I'm watching NVIDIA, watching AMD. Big speeches by their respective CEOs. Also have a conversation with CrowdStrike CEO Julie, who just spent only $300 million to take an investment in F1 team.
It's fun to have an investment in F1.
Only $300 million, Julie.
Well, that's how much they're going for these days, I guess. All right, that does it for Morning Brief. You've got Opening Bid next on Yahoo Finance.